The former boss of Hong Kong stock exchange operator HKEX, Charles Lee, has kept himself busy since stepping down. In the span of 2 years, he has raised more than $500 million from the likes of Sequoia Capital China and Lenovo Capital for his investment platform, MicroConnect. It does not trade stocks or bonds. Instead, institutional investors buy daily revenue obligations. All these fund China's micro and small businesses in exchange for a part of their revenue. Now, Mr. Lee has Southeast Asia in his sights. He spoke exclusively to CNA's Roland Lim.
This is really made possible by the digital revolution of China, particularly with the small and the micro store level businesses where they are all very much connected digitally. When the digitalization is this wide and deep, you are able to actually make investment with transparency, with security at the store level, and be able to collect the money back digitally every day.
What sort of criteria do you set when you go about enlisting or investing in these brick and mortar businesses in China?
We are investing in stores only if they have achieved a certain level of digital controls, acceptable, that allow us to be able to know exactly what's the revenue and know exactly how I can get our hands on that revenue every day. So that's the basic criterion, which means that we are going through brands and chain companies that have hundreds of stores already. The second group of big connect partners that we work with are property mall operators or strip landlords who are able to essentially introduce revenue-based rent arrangement so that we are able to offer to both the landlord and the tenant a revenue-based rent arrangement so that the little guys do not face a very big upfront investment cost of putting a huge deposit, huge advance renovation cost, and also when the business is sluggish. So investor will become the virtual landlord of tenants into the future, who the tenant don't have to pay that upfront big investment. MicroConnect's investors will be essentially buying that away.
And your investors being virtual landlords of these shopping malls, are the returns just as good as real estate investment trusts?
Oh, need to be a lot higher than that, because that's more like fixed income based on the credit worthiness of the property developer. This is all cash flow for the little tenant. But the reason MicroConnect works in this new particular product is the ability to collect money daily, reinvest, compounded reinvestment scheme every day. So that for every dollar you invest, you create a $1.7 AUM. So therefore the velocity of using that dollar is so much higher than otherwise that the investor getting returns for multiple people for the same dollar, even though people think we made a $1.7 investment, but we actually only spent $1. Returns on that 1.7 is very reasonable for the little guy, but return divided by the $1 we actually spend translated into almost double that return. So investors actually getting equity-like returns, but fixed income-like stability. So this is going to be revolutionary. This is going to be the way finance is going to be done, at least for brick and mortar consumer businesses.
Daily revenue obligations, as you say, relatively new asset class. Yes. What are the risks and challenges?
In terms of investment, the question we should ask is whether is this a good investment? If it's a good investment, how the risk is compared with traditional investment. And so first of all, it is a good investment because otherwise people wouldn't put their own personal savings and the family in borrowing because the market is not supporting them for that. They tend to really return their capital in about 15, 16 months.
Do you have plans or targets in terms of the number of businesses that you want to sign up on this DRO program?
Well, our long-term goal, whether that's 10-year goal, 8-year goal, some of our colleagues think it could be a possibility of a 5-year goal, is to hit 1 million or 2 million shops. And each shop usually requires about 500,000 yuan worth of investment. So our long-term target is to make this market, in terms of fundraising, into 1 trillion RMB.
Plans to replicate this DRO models into other markets outside of Greater China?
Probably serious efforts will start sometime next year. Yeah, we need to make sure the model works solidly in every aspects, so that when we roll out, it's much easier for people to take it from there.
Any countries in particular?
Well, this is really going to be where you have large population, so Indonesia, Malaysia, and maybe Thailand, maybe Korea. Yeah.
So we talked a lot about microfinancing. We need to talk about the macro picture. Chinese retail sales jumped last month. There seems to be green shoots of recovery in Chinese consumption. Are you optimistic about the Chinese economy?
Yes, absolutely. At the grassroots level, that's where we are investing. We see very robust, growth. For example, we have a particular statistic. We measure how much cash we are receiving every day for every 1,000 of investment. We've been tracking that throughout the entire last almost 2 years now. So for the entire last year, we are able to generate 1.48 yuan per 1,000 investment last year. To date, from inception, including last year, that number is already becoming 1.69 cent per 1,000 investment every day. But I'm sure when people talk about sluggish consumption, I think the most impacted is the top end. People clearly are more reluctant to spend on big ticket items, on luxury items, on luxury travel. But on daily needs, on food and beverages, basic retail, basic services, and basic cultural activities, the spending is still there.
I mean, Beijing has the tools to actually fix the economy, to stimulate it. Why aren't they using it?
I don't agree that they're not using it. They're using a lot of tools, and there are a lot more tools in the boxes. But I think, when the economy is hit by this quite long process of crisis, of different multitude, you have the cyclical economy, you have the deleveraging, then you have the supply chain challenges, and then you have COVID, and then you have the massive political and the geopolitical tension. In combination, they have created such a compounded impact on the broader economic activities that has created this sucking impact on confidence. So the internal confidence was probably impacted a lot more so than any other previous crisis we have seen. So it will take time for that confidence to repair. And only when that confidence is built towards that critical point, then external measures and tools can help catalyst a massive change.